It's quite the calling. On that note, I'm excited for the next panel. Follow the money. What institutions are looking for in 2025? Handing it over to our moderator, Zach. Zach?
Thank you very much. Appreciate that. Good morning, everybody. How are we doing today? Yeah, some applause would be good. Come on now. I know things aren't that bad. All right. Today, we're going to be talking institutions, what they want, where we're at right now, what's going on in the Ethereum world and beyond. We're going to do some quick intros. I myself am Zach Guzman, former anchor at CNBC and Yahoo, now running the only and fastest growing community-owned media outlet on ETH at Coinage. And we have our treasury in ETH, so hopefully what we learned today will actually be applied immediately at our DAO. But Stacey, why don't we start with you and just do intros real quick?
Sure. Thanks so much, Zach. My name is Stacey Ann Pearson. I'm currently the managing director of Singapore and Southeast Asia for Zodiac Custody, which is a custodian that was created by Standard Chartered Bank and supported by 4 other banks. Previously, I was head of Web3 for APAC at AWS and a bunch of other initiatives that we're happy to talk about.
Good morning, everyone. My name is Annabelle Huang. I'm the co-founder and CEO of Altius. We're a new protocol that came out of Stealth just last week, focusing on building a VM-agnostic modular execution layer that brings high performance to any blockchains. Previously, I was a managing partner at Amber Group, focusing more on institutional focus, liquidity, and liquidity provisioning.
Hey, everyone. Good morning. My name is Joshua Lem. I am the head of markets at FalconX. FalconX is a global digital assets prime broker and trading firm. We do everything from spot and derivatives, kind of OTC liquidity, electronic market making, and lending, borrowing, custody, all the full spectrum of services. But I'm happy to dive into all of that.
Hi, everyone. My name's Grant Hummer. Been ETH about 10 years. I'm the co-founder of Etherealize, which is a project trying to bring Wall Street to Ethereum.
Nice. I like that. And yes, Grant, maybe we start with you, because right now it's very interesting to think about where we are in the Ethereum roadmap. I myself was just reflecting, it was 1 year ago that I was on the stage with Jesse Pollack when Base was just kind of getting set off. And fees, as the L2 strategy has played out, have come way down. And it makes it way easier to use, real-life applications on Ethereum. And I guess I just want to start with a question to you with Etherealize now launching to get institutions to understand even that roadmap or the fact that fees are down or what they can do with it. What's kind of like the thrust of what you're trying to do with Etherealize to help educate institutions?
Yeah, so before founding Etherealize, we did a bit of a deep dive into the level of Wall Street's education about Ethereum and discovered it's pretty low. I think this is compounded by the fact that Ethereum is very complicated right now, and it's only become more complicated with the roll-up roadmap. So yeah, we're just trying to explain that to them. Ethereum is currently in something of an awkward adolescent phase. The fees have come down. Usage is actually up, but it's not up sufficiently yet to compensate for the decline in fees. And so there's this law called Jevons paradox, or Jevons law, which is that if the price of a resource falls, the usage of the resource will increase by more than the decline in the price, such that revenues will increase. And I think that's what will happen with Ethereum in the coming years.
With an institutional focus, too, I think, Josh, I'd be interested to get your take, because the idea of the roadmap playing out kind of right when the ETFs got approved. I was looking at the numbers, and I think to date, it's about a little over $3 billion in net inflows for the Ethereum ETFs, and about 10 times that for the Bitcoin ETF. And you could make the case that when ETH's ETFs got approved, it was in that hangover period where it was like in the shadow of what happened with Bitcoin. And so, I mean, I guess with what Grant just said, what do you make of kind of the way that it kind of got caught in the launch and what institutions are looking at when it comes to ETH?
Yeah, I think that's a great point that you brought up around just institutional awareness and education around Ethereum. I think in a lot of ways, the narrative on ETH has deteriorated in the last couple of years, right? Because institutions are either focusing on crypto, Bitcoin in particular, as a store of value, inflation hedge as a sort of like a macro portfolio allocation, and it's very correlated to other global macro markets. Alternatively, they're looking at sort of the technology itself as a way to make payments and sort of like have a decentralized and uncensorable network of money and value transfer. And that, unfortunately, a lot of that activity is in the minds of Wall Street and institutions on Solana and other kind of faster and maybe cheaper networks. And that narrative is constantly changing, and I think a lot of it is like investor relations work and talking to banks and hedge funds and trying to educate them on like what types of activities are still happening on ETH and on the L2s. And so, yeah, we're seeing a lot of that happening now. Obviously, there's a lot of supply and demand dynamics at work right now, especially around like investing schedules on like Solana and things like that. So there's constantly rotation happening, and the fact that there's only a handful of assets that have really global reach through ETFs means that all of the focus of the global financial community is really on these like top 3 assets, and that's where all the rotation will happen.
If I could just quickly add on to that, because when I was at Amber, we've tried from very early days to educate our institutional and high net worth clients on Bitcoin and obviously Ethereum, but Bitcoin has always had a very clear, almost brand as the story, the digital gold, right? And then the investors, especially the traditional investors, can quickly understood. For Ethereum, because it has so much different usage, it became, first of all, it was proof of work and then turned into proof of stake and to ultrasound money, and then there was the world computer narrative, and then I guess now infinite gardens. So I think for institutions, they actually also just want to follow maybe one clear direction and the one liner of why invest in Ethereum. And I think because it was so widely used in so many different use cases, that made it a little complicated. So obviously Bitcoin has the first mover and a very clear narrative all throughout the last 10 plus, almost 2 decades. So it was very easy for Bitcoin to become the gateway. So hopefully that trickles down to Ethereum, especially as we have etherealized to have the institutional push.
Can I offer also an opportunistic view? So I do agree with the panelists in terms of the dominant narrative. One thing I think that we're recognizing at Zodiac Custody is because we primarily serve traditional financial institutions, because we're bank-backed, asset managers, family offices, ETF issuers, we are able to see the trends and the asks up front. And what we're seeing is that institutions are looking for, now bear with me with this oxymoron, safe DeFi. So they are looking for better ways to enact capital efficiency for the funds that they're custodying with us. So I think the opportunity for Ethereum here, given that it was one of the first big blockchains to really galvanize the DeFi ecosystem, is to lean into that with institutions, right? So providing this safe ecosystem for DeFi projects that have enterprise-grade solutions. I think that is where that narrative shift could really help to play with the institutions, because we know today they are looking for more capital-efficient opportunities for their funds.
I want to dig deeper into safe DeFi because I want to get the tough questions out of the way, and these are questions everyone again in the Ethereum ecosystem are asking right now. Grant, I feel like the Bybit hack is probably the worst way to start your institutional push in terms of like, hey, safe DeFi is a thing. But I think it's important, especially like people in the media, to get right in terms of what happened, because I think we all know it's not like Ethereum got hacked, and people need to make sure they're clear about that. But when it comes to kind of safe DeFi and things like that, the overhang, what are you kind of hearing when it comes to those fears and getting those questions answered?
I think we're even still a little ways away from that. The institutions are still at the crawling stage. I would call DeFi the running stage. Some of the more adventurous ones, like family offices and hedge funds, they were deploying into DeFi years ago. But you're talking about the big sell-side institutions like banks. They're still a ways away from that. I think if you can get some of the more buy-side institutions, they're also more adventurous. they're certainly open to it. I don't think the Bybit hack actually changed very much in the long run. You know, crypto's had a long series of hacks. They understand it wasn't a hack of the core protocol. This was kind of a wallet snafu. And yeah, I think, you know, the trend will still remain up and to the right. So.
Yeah, I mean, I'm curious to get other people's takes on that too. And Josh, you're, I guess, kind of more attached into some of the market structure piece. But I mean, to think about the Bitfinex hack in 2016, that was $72 million. Bitcoin dropped like 25%, I think, back then. And the Ethereum hack, 1.4 billion, and at least on the day, I mean, we can talk about what's happened in the few weeks since, but not as extreme, but then maybe over time. So I'm just kind of curious to get the impact from you.
Well, yeah, I mean, I think the biggest cure for, you know, this sort of fallout of these major hacks and the loss of trust is just like the ability to generate cash flows, right? And you've kind of seen this happen with things like Tether and Bitfinex and Bybit now. It's just sort of, if you have these dominant firms that are actually, you know, creators of useful products that people use, and they're able to generate cash flows to cover any losses, that's actually the biggest way to recover consumer trust and rebuild. It's kind of ironic, right? Because like a lot of the ways that these institutions are able to generate so much money is because maybe they operate in a way that's like a little bit outside of like the black and white regulatory regime, and so they're able to bring in like more users globally in this decentralized world that we live in. And I think the fact that that is originally maybe a source of like mistrust, but actually the fact that they can produce revenue should increase their credibility to the market.
Yeah, so I just wanted to add on because I think the piece that we typically underestimate within the Web3 side is the sentimentality that comes with, you know, hacks in terms of getting folks who are not native to crypto to either explore or buy into the ecosystem. So I think one of the aspects around, one of the residual, I should say, effects of, you know, such a large hack is for institutions to continue to ask for better risk management practices, as well as the kinds of governance and controls that they are typically used to on the traditional side. Institutions that are well positioned with internal risk controls and risk management will be well poised to win some of these big institutional deals because they'll feel that sense of comfort. So a very quick example, because that seems vague. At Zodiac Custody, we have a product, there are other custodians that have it as well, is off-exchange venue trading and settlement, right? This is huge for institutions. So what that simply means is the institution is able to trade or do asset swaps without putting their funds on an exchange, which introduces them to counterparty risk. That's something that's huge in the sense that they are looking for these kinds of risk management embedded products in order to protect themselves from what they might read in the news, for example, like Bybit hack. Yeah.
Well, let's shift maybe into some of the optimistic outlooks here too, now that we, you know, think about where we go from here. And Annabelle, I wonder if we could highlight kind of some of the advantages that Ethereum has now in the roadmap and kind of where it is as a technology, where we are. Because again, I think there is some of the ethos that gets lost in terms of what Grant was mentioning in fees and other options, other chains out there. I'd like to go down and just kind of talk about what the biggest competitive advantage Ethereum might have right now that maybe people miss in terms of why institutions might be drawn there instead of other options.
Yeah, I think the biggest thing, and I think the reason why we, at least I think a few of us on this panel, still bullish on ETH and remain ETH back holders and keep building on top of Ethereum ecosystem is just the amount of mind share that it has among just super talented group of people. It could be developers, users, and this community. Obviously, we are going through a bit of rough patch. But there have been a lot of newcomers over the years, but having that mind share and market share has historically been very difficult to surpass. So, and I see people coming out of retirement to focus on building Ethereum again, just a sign that we have what it takes. And I think going back to the point of institutional adoption, again, I think ETH being the number 2, after Bitcoin, Solana will have, and other asset classes will have many years to catch up. Your earlier point about ETH being maybe ETF being a tenth of Bitcoin's flow versus maybe ETH is at now between 25 to 30% of the Bitcoin market cap. So I think we will see that trickling down to ETH, and ETH will be the next because having ETF issued is actually a really big milestone, and it'll take years for other assets to catch up. And even within, I think, just the crypto space, we talk about the hacks and everything, but I think it just shows resilience of the market, whether the operators themselves, they don't have government to backstop them, and we can quickly iterate and find out what the vulnerabilities are and quickly move on. So.
Josh and Grant, would you agree with that? Because I think, the other thing overhanging is we got CME futures and Solana potentially coming too, and that idea of a Solana ETF could potentially also put Ethereum back in the same camp. So I'm curious your thoughts as well.
Yeah, I would look at, I think it's important to look at ground truth. Like, what is the actual fundamental differentiators in these networks? And I think in Ethereum's case, is that it's actually decentralized. And if you zoom out and you think about what's needed for a real global financial system on the internet, I don't think a chain that runs in like 3 data center providers is that, versus a globally decentralized network with 10,000 plus validators distributed around the world. So I think that's Ethereum's main competitive advantage. It's true to the original cypherpunk ethos of crypto. And that makes it credibly neutral for countries all around the world to actually do business on it.
Yeah, I think to Annabelle's point, Ethereum has a long and storied history behind it, right? It's been battle tested, and I think retail always leads the way in DeFi and like financial innovations. Like all of us in this room are pioneers in a way, like trying out new protocols and new yield farms and things like that. And eventually, like the other panelists were saying, like all these institutional players want to come in and capture some of that yield, right, over time, look for that safe DeFi.
Yep.
And what they're actually going to pick are protocols that have a lot of durability and have gone through many iterations, maybe even have recovered through different hacks. And so they kind of trust the team that's behind it, and also trust like the brand and the fact that it's able to survive even, further into the future. So that is, and I'll say one more thing, which is like, if you think about the way that these institutions access DeFi, it's through like custodies and MPC wallet providers, and also using like KYT tools to do the compliance, like AML sanctions checks and all that kind of stuff. That's actually a very onerous requirement. All of those tools have been built for Ethereum and not necessarily for a lot of other chains.
True, that's very true. So, the infrastructure piece of it should not be overlooked either. But the other big thing, and I will put myself out there and say that this catalyst, I thought, you couldn't have predicted the Bybit hack, I don't think, unless maybe you're North Korea. But I didn't see that coming. And I really thought there was going to be a huge catalyst that's coming now, and we're just kind of waiting to see when it's going to get greenlit. But the idea of staking via the ETFs, that is kind of presumably kind of like the safest DeFi option to earn yield when it comes to things like that. And I don't know when it's going to happen, but I am curious to kind of ask you guys what the impacts of that will be, because before the hack, I thought it might be safe to say that'd be a pretty big catalyst for things in Ethereum. But what might be the impact, aside from potentially number go up, impact of institutional staking on that scale?
So I just want to make a very quick point on the last question is, in my previous role at AWS, one of the things that we typically were trying to educate the Web3 community about is that a lot of the institutions don't actually care about things we care about in crypto. Being fully decentralized, I think, is phenomenal for crypto native folks and companies that are used to crypto. But the majority of corporations, if you think, it's not a company, right? It's an individual in the company making the decision. And if they're not crypto native, they don't care how decentralized your blockchain is or how centralized it is. What they care about is what can it do, is it cheap, and is it fast? So that's one of the things I think we have to remember within the different blockchain communities, is that when you're working with institutions, you have to ensure that you know what they care about and what's the story that you need to tell for them to be able to work with you. Mm-hmm. So then moving to the staking piece through ETFs, I think it will be quite interesting because institutions are looking for that safe yield. Now, the piece here will be that what we're recognizing is that a lot of institutions are now asking for better and better and better APYs. And so the point will come is, can we do innovation on top of the staking through an ETF. Is there a way to use some of the innovations that we're seeing on the liquid staking side, or other ways to generate yield, whether it's through lending or whether it's through decentralized compute, whatever it is, right? Are there ways that we can capture that yield in the Ethereum community? Because that's where you'll start to get a lot more inflows for the Ethereum side, whether through ETF or through staking, et cetera.
Yeah, I would also open it up. Maybe I'm wrong. You can tell me if I'm wrong in terms of, Zach, don't pay attention to ETH staking, it's not the thing, but are there other catalysts that you're kind of more excited by?
Yeah, I mean, if you think about like traditional markets and what is usable as collateral, so basically like if you have a bunch of assets on your balance sheet, you want to put them to productive use, right? And if those assets are not generating any kind of yield, like if you're just holding dollars at a bank account, let's say, that's paying 0 interest, a checking account, then you're foregoing a lot of interest income. And that's obviously a very big consideration for ETH holders, even Solana holders, like any sort of yield-bearing asset. What we're seeing on our side is a lot of institutions who have these assets want to use them as collateral to do trading activity on exchanges, bilaterally with dealers on derivative structures. Like a good example would be you're holding a lot of Ethereum and you want to sell call options on it just to get more yield, right? It's a common strategy in traditional markets. Like if you hold, Apple stock, you would sell calls on Apple to get additional yield pickup. It's now more common to kind of post like LSTs or LRTs that the holder of the initial asset that's overriding can collect the yield while they're posting it as collateral.
Yeah.
So that's a very powerful idea, and it's going to translate to the ETFs as well.
Yeah, I think a big catalyst is going to be RWAs. There's this concept I call the Ouroboros, which is a snake eating its own tail. I think that describes like most of the crypto markets over the past decade, where there's no actual like positive sum impact on the world from it, but traditional finance does offer that by tethering itself to real businesses, real value creation, and crypto can be the substrate on which the new rails on which those things take place. And so I think Ethereum is perfectly positioned to be that.
Yeah, Annabelle, real quick, I don't know if there's anything else that you're more excited about other than that to squeeze in. If there is, by all means, before we wrap up.
Again, very excited about what the future looks like for institutional adoption for Ethereum and just crypto in general. And part of what I'm building now is actually more focused on the infrastructure side, so that that's not going to be a bottleneck, whether it is consumer adoption or maybe institutional adoption. And that's always been very dear to my heart. And even as we build out a lot of the institutional liquidity services for institutional adoptions, a big part of it is trading-related use cases. If we can get to even, we're at maybe less than 10% of what centralized exchange volumes that we see on-chain, and on Ethereum is maybe just a fraction of that. So can we actually bring more volume that's traded on-chain and unlocking more cases there is a lot, happening on the asset side, improved security, maybe, yield-bearing collaterals. But what about on-chain infrastructure?
Yeah.
Can we get close to sort of like an on-chain Binance that we can bring more trading activities directly on-chain?
Well, I will say, as we wrap up here, I think Grant's final point is very interesting to think about the ethos of Ethereum and what it's fostered, and real-world assets, very interesting. Coinage now paying out a dividend. Big news, I think. Anyways, thank you guys for joining us, and thank you to the dog who's here as well. Thank you for waking up early. That's it for us. Thanks, guys. Appreciate it.